CISI Global Securities Operations. This is a 20 flashcard revision challenge. Answer each question before the countdown ends, then check the explanation. Question 1. What services does a prime broker provide? Answer. Prime brokers give hedge funds an integrated service. Execution, clearing and settlement, custody, securities lending, margin finance and consolidated reporting. Question 2. What is CREST and who operates it? Answer. CREST is the UK Electronic Securities Settlement System and CSD. It is operated by Euroclear UK and International and settles UK equities and gilts. Question 3. What is the role of a central counterparty, CCP? Answer. A CCP uses Novation to become buyer to every seller and seller to every buyer. It centralizes counterparty risk and supports netting and settlement. Question 4. What is SWIFT and what messaging standards does it use in securities? Answer. SWIFT is a secure global financial messaging network. Securities messages use ISO 15022 MT formats and increasingly ISO 20022 MX formats. Question 5. What is delivery versus payment, DVP, and why is it used? Answer. DVP makes securities and cash transfer together. It removes principal risk. One party cannot deliver full value without receiving the other leg. Question 6. Describe the 3 BIS DVP models. Answer. Model 1 is gross securities and gross cash. Model 2 is gross securities and net cash. Model 3 nets both securities and cash. Question 7. What is continuous linked settlement, CLS? Answer. CLS settles both currency legs simultaneously through payment versus payment, reducing the foreign exchange settlement exposure known as Herstat risk. Question 8. What is Novation in the context of CCP clearing? Answer. Novation replaces the buyer-seller contract with 2 contracts, buyer to CCP and CCP to seller. The CCP becomes counterparty to both sides. Question 9. Who holds legal title vs beneficial ownership in a nominee account? Answer. The nominee company holds registered legal title. The underlying investor remains the beneficial owner and keeps the economic benefits and entitlements. Question 10. What is the difference between a mandatory and a voluntary corporate action? Answer. Mandatory actions occur automatically. Voluntary actions require an investor election. A mandatory event with options occurs but lets the investor choose the benefit. Question 11. What happens to legal title when securities are lent? Answer. Legal title passes to the borrower. The lender takes collateral and a fee and receives manufactured income payments to preserve the economic result. Question 12. What is a repo agreement and who retains beneficial ownership? Answer. A repo is a sale with an agreement to repurchase. The cash lender gets legal title during the term. The cash borrower keeps the economic exposure. Question 13. What are the 3 UK dividend tax rates for amounts above the annual allowance? Answer. Above the allowance, 8.75% for basic rate taxpayers, 75% for higher rate taxpayers, and 39.35% for additional rate taxpayers. Question 14. Are gains on UK government bonds, gilts, subject to capital gains tax? Answer. Gains on UK gilts are generally exempt from capital gains tax. Do not apply that rule to gilt strips, whose increase is taxed as income. Question 15. What is stamp duty reserve tax, SDRT, and who pays it? Answer. The buyer normally pays SDRT at 0.5% on electronic transfers of chargeable UK shares. Paper transfers normally use stamp duty at 0.5%. Question 16. What is the difference between FATCA and CRS? Answer. FATCA is US legislation focused on relevant US accounts. CRS is an OECD multilateral standard for automatic exchange of financial account information. Question 17. What are the 4 categories of operational risk? Answer. The 4 operational risk sources are processes, people, systems, and external events. Question 18. What is systemic risk? Answer. Systemic risk is the danger that one failure cascades through connected institutions and threatens the stability of the entire financial system. Question 19. Describe the 3 lines of defense model. Answer. First line, business owns risk. Second line, risk and compliance provide oversight. Third line, internal audit provides independent assurance. Question 20. What are key risk indicators, CRI? Answer. KRIs are early warning metrics showing rising risk before loss occurs, such as settlement fails, reconciliation breaks, downtime, or staff error rates. Continue with the complete course at Exams Academy.